Let's get in Ashutosh Khajuria, who's the President Treasury of Federal Bank, who joins in live to tell us the kind of direction that he is marking for the yield on the 10-year bond. Ashutosh, thanks very much for joining in. A big disappointment when it came to the government auction. How do you expect the yields are likely to trend in light of this?
Yeah, I think yields are going to trend between 865 to 890 levels because I think market borrowing program, if you see, it's definitely, there is not much of a difference between FY12 and FY13 because if you see the market borrowing program, the difference that is shown as higher in FY13, if it is taken together with the treasury bill issuances and all, as against the budgeted estimates, if you see the revised estimates, and if you see the current treasury bill announcements, I think more or less we'll be ending up at additional net borrowing of 5.37 trillion rupees, which is going to be almost same as what it was in FY12. Now, if RBI continues to inject liquidity through OMOs, I think to the extent they did in FY12, I think this market borrowing program should sail through. An initial, of course, front loading is there, and as a result of that, definitely there is a pressure on yields because lots of maturities are there. We saw 6.85% 2012 maturing on 4th. Actually, due date was 5th, and because 5th being holiday, it has matured today. And we have another large amount of redemption coming on 3rd of May, which is 7.40% 2012. So I think, yes, yesterday's devolvement did send a signal that market players are not quite comfortable with the current lot of issuance, 18,000 crores coming in a single week or so.
Sure. Well, Ashutosh, the liquidity position has, while it does firmly stay in negative domain, it's come off quite a bit as we've come into the new financial year. It's down to 1,38,000. Despite that, you continue to see, of course, yields go up for the reasons you mentioned. Now, there is one view in the market that you will likely see the yield on the 10-year bond possibly touch even 9% as we go into the next, as we enter the next week. Would you go with that?
Yeah, I don't think it's going to touch 9%. It may try to test 890 or so, because I think if everybody is talking of 9%, there would be a, I would say considerable buying happening beyond 890. And as a result of that, you may not see 9 being touched and all. At the same time, the numbers on PMI side and all are not that comfortable that you can totally rule out a repo rate cut. So even if there is a cut of 25 basis points happening in this annual monetary policy, I think there would be a big support to the market, and if you have more of OMOs coming in, the market borrowing program should sail through.
Ashutosh, if you look at, the big challenge, of course, like everyone's been talking about, remains oil prices, which are holding firmly at about $125 a barrel. That's one. Due to huge supply side constraints, you're seeing order backlogs for the manufacturing sector piling up, which is somewhere strongly indicative of core inflation being a big challenge for the RBI. Given all of this, what do you believe the chances of the RBI not doing anything on the 17th of April as far as the policy rates go is?
This time I would say it's 50-50. RBI, is just looking ahead and, looking at being ahead of the yield curve, they may go for 25 basis points cut. If they really are, because they wanted to wait for budget to come in and see, what government is doing on the fiscal side. There had not been much of a, so-called revolutionary change on that side, or anything which could bring comfort to Reserve Bank of India, and straight away they would have gone ahead with cutting and all. So therefore, I think it's 50-50 right now. As regards liquidity you were mentioning too, I would like to point out, because day after tomorrow you have the reporting Friday. So any number that comes out just a couple of days before reporting Friday, and that too tomorrow and day after being holidays in Bombay, I think that doesn't suggest the correct picture, because it's adjustment of CRR product. So yesterday's number or today's number may not actually tell you the a real, deficit on the liquidity side. So for that, we'll have to wait for Monday numbers and all. But yes, towards the end of every fiscal, you find, government spending going up and the mop-up of, corporation tax coming back to the system. So there is going to be a relief on liquidity front. I just would not commit myself on repo cut. It's just 50-50, I would say.
Ashutosh, wanted to deviate from that. What's your view on the Indian rupee? It's been up 4% in the year 2012 so far. What's the direction you see it taking now?
See, it all depends on capital flows. If you have seen the BOP numbers and all, there was, negative number as far as BOP is concerned. After a long time, we saw even taking the capital account into consideration, we were negative on that count. But I think Q1 of this calendar year, or I would say Q4 of previous fiscal, brought in some cheers. And I think since January, I think that quarter we saw somewhere around 8 to 9 billion flowing in through FI investments. So I think it would all depend on how the industrial climate shapes up and what type of inflows do come on the capital side. Yeah, trade deficit is a concern, and not concern, I would say it's going to become a bigger problem. You are going to have month after month $15 billion deficit on average per month, which is unsustainable. You have a good cushion available through remittances and software exports and all, but that's not sufficient to bridge this type of gap. Anything above $150 to $160 billion gap on trade account per year is really, at current size of GDP, is going to be very difficult. We saw current account deficit burgeoning, going up, breaching 4% mark, and that is really, cause of concern.
Right, Ashutosh,
and that is the reason why, that is the reason I would see, there would be a pressure on rupee. Yeah. There would be a pressure on rupee, and in between, because of capital flows, you may see, rupee appreciating a bit, but overall, it's negative for rupee.